We've got Scott Bauer, the CEO of Prosper Trading Academy, standing by on the floor of the CME Group at the Chicago Board of Trade. He's joining us to take a look at some of the numbers, market reaction to them. Scott, happy Thursday and welcome to the Future Show. Let's dive right in. Let's talk jobless and some of the numbers, the GDP numbers. Let's begin with GDP. Probably is going to get a bit more attention. I noticed that it came in basically in line with expectations at 2.5%, and I'm noticing that the indices are still holding on the highs from the overnight session.
Yeah, and this is exactly what the market wanted, and quite frankly, what the Fed wanted also, Ben.
Good point.
Because if we had gotten a much richer, a hotter number, maybe there would have been some more consternation of, okay, are we going to lower by a quarter? Are we going to lower by a half? Or maybe we're not going to lower at all. However, this number is right where they want to see it because it makes their decision that much easier in terms of what to do 3 weeks from now. So the market likes this number. As you said, we're holding their gains. I'm looking up here right now. We're holding their gains for right now that we've seen overnight.
Yeah, even for the most part, Treasuries seem to be pretty satisfied with this number, Scott. In terms of jobless claims, I noticed jobless came in here right at 215,000, also in line with expectations. Looks like last week got revised a little bit lower, but how much attention does a number like this get when we're just a week away from the big non-farm payrolls next Friday?
You know, if there would have been a big outlier, it would have been a little bit more of a conversation, but that number is gone now. Like you said, next week is now the big number. And really this morning, GDP was the bigger deal because to me, like I said, if that would have been a super hot number, if we would have seen something 2.5% maybe, or even upwards, which was, highly unlikely, that would have, given some problems to the Fed, at least in determining what to do. So this jobless claims number, that's behind us. Next week's the big number.
All right, let's hop over the big pond here, Scott. Let's talk to UK and some of the recent developments this week. Boris Johnson, it sounds like he got his way in terms of his request to basically limit Parliament's participation in the discussion, the negotiation process. I'm surprised to see that the pound hasn't come off more in reaction to that. We saw it selling off a little bit yesterday, but it's rallied some off the lows. Is this just kind of sell rumor, buy fact?
No doubt about it. And, I think that the massive sell-off that we've seen over the last weeks and months really was just ahead of this news. And, the market got maybe not what the market didn't really want, but what it expected.
Yeah.
So when you take, when you take that equation out of it, when you take the uncertainty out of it, what happens? Things calm down, and we actually saw a little bit of a rally in the pound.
Yeah, Scott, in terms of the GDP numbers, you mentioned how this is what the Fed was looking for. It looks to me like it's what the dollar was looking for as well. We had GDP. Yeah. I actually said 2.5%. That was for the deflator.
2.1, I think.
Right. GDP actually came in at 2.0. Last month was 2.1. And it's interesting to notice here again that the GDP price index, 2.5, a little bit higher than expected. They were looking for 2.1. The GDP price index came in at 2.1. As you mentioned, Scott, prior was 2.4 there. Real consumption at 4.7%. And core GDP price index coming in at 1.4%. I mentioned the dollar seeing a bit of a bid, but Scott, one of the things that I've been watching is in terms of other foreign currencies, we had the Mexican peso, one of the worst performers, lower in reaction to their GDP forecast downgrade by the central bank, but also we're seeing the strength in the dollar, which is weighing on currencies like New Zealand dollar, Aussie dollar. I mentioned the peso, you've got the euro near lows as well. Their inflation numbers weren't really necessarily anything to raise eyebrows this morning either.
Yeah, the dollar's been so solid, and it's really been so strong against just about every currency in the world, really, except the yen. However, with the Mexican peso, now we're down to a low that we've seen, that we haven't seen, I should say, since last December. And, it's really based on their GDP figures, things not going great there. You have the combination of that and the strength of the dollar, which is weakening that peso.
Scott, I'm wondering why the New Zealand dollar hasn't gotten a lift along the lines of what we've seen in the indices in terms of on the optimism as China announced that they're not going to retaliate. They're going to take the high road, so to say, in terms of the back and forth of tariffs. It's not just the RBA or New Zealand dollar, though, that I'm focused on. We've got the Bank of Australia next week. We also have Bank of Canada set to report policy, interest rate policy next week. Talk to me in terms of what you're seeing as far as some of those not as closely watched currencies.
I was wondering the same thing, Ben, because the New Zealand dollar is so closely tied to what happens in China and to the yuan. And so, you would have figured that this good news that we had overnight, as we've seen the roller coaster over the last year or so, the New Zealand dollar has really moved along with that, and it didn't tonight. So I'm a little concerned about that, concerned in the fact that maybe when they, have their announcement, whether it's next week or in a couple weeks, that maybe there's going to be a change in their policy.
All right, we've got the New Zealand dollar posting into new lows. They're off it by about 36 ticks right now, but still down on the day. Actually up on the day now by about 0.8% here. Let's talk about some of the German data. Disappointing again for the most part. Job creation is really headed in the wrong way for them, Scott. Although unemployment rate remains steady at 5%, August was the 4th month that they've seen without net gains in job growth. I mean, it's almost the exact opposite of what we're seeing here in the U.S.
Yeah, it's dismal. I mean, there's no other way to describe it other than obviously very dismal.
Yeah.
And I think they have to be very concerned. That's why you're seeing a lot of weakness there. That's why you're seeing the dollar stronger, actually, because, again, just like we were talking about Mexico, you're seeing those weak economic numbers coming from other parts of the world here. So where else do you go? You go to the dollar.
Yeah, if lower today, Scott, that's going to be 4 days in a row for the euro currency. I'm looking at the chart right now. They're currently only about 20 ticks off that low, that 2019 low, which was a multi-year low. Scott, really appreciate you joining us here for a look at the currencies, the numbers that came out this morning. And traders, that's Scott Bauer. He's the CEO of Prosper Trading Academy.